Well, I need to tell you something. Something I wish I could tell every young person who's putting off investing. Every person in their 20s or 30s who thinks they have time. Every person who's waiting for the right moment to start, you're making a mistake. The biggest mistake you'll ever make with money. And 20 or 30 years from now, you're going to look back and desperately wish that you had started earlier. How do I know this? Because I've lived it. I've seen it. I've watched thousands of people over decades make this exact mistake. And I've heard their regrets when they finally realize what they've lost. See, I started investing when I was very young. And that early start, that's probably the single biggest factor in why I became one of the most successful investors in history. Not because I'm smarter than everyone else, but because I gave compound interest more time to work. So today, I want to show you exactly why starting early matters so much. I want to show you the mathematics of time, the brutal reality of delayed starts, and the opportunity cost of every year you wait. This isn't going to be comfortable. Some of you are going to realize you've already lost years you can't get back, but that's okay because the second best time to start is right now. And understanding what you've lost will motivate you to stop losing more. So let's start with the most important concept in all of investing. The reason why starting early matters so much, and that's compound interest. Einstein supposedly called it the eighth wonder of the world, and he was right. Compound interest means you earn returns, not just on your original investment, but on all the returns you've already earned. Your money makes money, and then that money makes money, and then that money makes money. It grows exponentially, not linearly. But here's the key. Compound interest needs time, lots of time. The longer you give it, the more powerful it becomes. And in the early years, it doesn't look like much is happening. It's only later, decades later, that the magic really kicks in. Let me show you what I mean with some real numbers. And I want you to really pay attention to this because this is the foundation of everything else I'm going to tell you today. Let's say you invest $10 at age 20. You never add another penny. You just leave that $10 alone, earning 10% annually. By age 30, you have about $26,000. By age 40, about $67,000. By age 50, about $174,000. Still following. Now, here's where it gets interesting. By age 60, you have about $452,000. By age 70, about $1 million. And by age 80, about $8 million. From $110,000 investment at age 20, never adding anything, just letting it compound for 60 years. That's the power of time. Now, let's compare. What if you waited until age 30 to invest that same $10,000? You'd have about $452,000 by age 80. Not $8 million, $452,000. You lost $2. $3 million by waiting 10 years from one investment. That's not a typo. 2, $3 million gone, lost forever because you waited 10 years to start. Do you see what I'm saying? Do you see why I started this by saying you'll wish you started earlier? Because every year you wait costs you exponentially more wealth than you can possibly imagine when you're young. But let me make this even more clear. Let me show you something that I think about a lot. Something that should haunt anyone who's not investing yet. Let's compare two people. Person A starts investing $2,000 a year at age 25. They do this for just 10 years until age 35. Then they stop completely, never invest another penny, but they leave that money invested until age 65. Person B waits until age 35 to start, but then they invest $2,000 in it every year from 35 to 65. That's 30 years of investing compared to person A's 10 years. Who do you think ends up with more money at age 65? Person A, who only invested for 10 years but started early, ends up with about $581,000. Person B, who invested for 30 years but started late, ends up with about $328,000. Read that again. Person A invested $20,000 in total. Person B invested at $60,000 in total. Person A ends up with almost double what person B has, double despite investing 1/3 as much money. That's the power of starting early. That's why you'll wish you started earlier if you don't start now, because no amount of money invested later can make up for time lost early. Never interrupt compounding unnecessarily. The biggest interruption is not starting, delaying, waiting. Every year you wait, you're interrupting compound interest. You're losing time you can never get back, and that lost time costs you more money than you could earn working for decades. Now, let me address what some of you are thinking. You're thinking, I can't afford to invest right now. I need to pay off debt first, or I need to save up more money before I start, or I'll start investing when I make more money. Those sound reasonable, but they're wrong and they're costing you a fortune. Let me explain why. First, the debt argument. Yes, you should pay off high-interest debt like credit cards, but low-interest debt, student loans at 4%, you should be investing while paying that off because your investments will likely earn more than 4%. If you wait until all your debt is paid off to start investing, you might wait until you're 35 or 40, and we just saw what that costs you. Millions of dollars. Is that really worth it to pay off low-interest debt a few years faster? Second, the I need to save more first argument. This is just procrastination dressed up as prudence. You don't need $100,000 or $5,000 to start investing. You can start with 150. Some brokerages let you start with nothing. The amount doesn't matter. What matters is getting in the game, beginning the process of compound interest. You can always add more later as you earn more, but you can never get back the years you waited. Third, the I'll start when I make more money argument. This is the worst one because it never happens. When you make more money, you spend more money. Lifestyle inflation is real. You'll never feel like you have enough to start investing, so you have to start now with whatever you have at whatever income level you're at. That's the only way. Because waiting for the perfect moment means waiting forever. Let me tell you about my own experience. When I made my first serious investments young, I didn't have much capital, but I invested it anyway. And you know what? That early start, despite the modest amount, taught me habits that made me extraordinarily successful. I learned how markets work. I learned to save and invest consistently. I learned patience. I gave compound interest decades to work. If I'd waited until I was ready, until I had more money, until I understood everything perfectly, my results would have been dramatically different. No exaggeration. Because I would have lost the most valuable years of compound growth. So, here's what I want you to understand. The money you invest in your 20s is the most valuable money you'll ever invest. More valuable than money you invest in your 30s, 40s, or 50s. Not because the returns are better, but because it has the most time to compound. Every $1,000 you invest at 25 is worth about $17 at 65. Every $1,000 you invest at 35 is worth about $7 at 65. Every $1,000 at 45 is worth only about $3,000 at 65. Do you see the difference? Your 20s are worth almost 6 times more than your 40s for investing every dollar every year. The value of time is enormous. Now, let me show you something else, something that most people don't think about, the opportunity cost of not investing. Opportunity cost means what you give up by choosing one thing over another. When you choose not to invest, you're not just failing to gain money, you're losing money compared to what you could have had. Let's say you're 25 years old, you make $50,000 a year, you could invest $5,000 annually, 10% of your income, but you choose not to. You spend that $5,000 on whatever. Nicer apartment, newer car, vacations, restaurants. That feels good in the moment. You're enjoying your money. You're young. You deserve it, right? But here's what you don't see. Over 40 years at 10% returns, that $5,000 annually becomes about $2 million. So every time you spend $5,000 that you could have invested, you're not just spending $5,000, you're spending $2 million in future wealth. That's the true cost. That's the opportunity cost. Most people never think this way. They think it's only $5,000. I work hard. I should enjoy it. But they don't realize they're trading $5,000 in immediate pleasure for $2 million in future security. Is that trade worth it? Maybe sometimes, but making that trade year after year after year, that's how people stay broke despite earning good money their entire lives. And the younger you are, the worse this trade becomes because the opportunity cost is higher. That $5,000 spent at 25 costs you so much more than $5,000 spent at 45. This is why I've always lived below my means. Every dollar I don't spend is a dollar that compounds into wealth. Most people see frugality as deprivation, as missing out, but I see it as trading temporary pleasure for permanent freedom. And that's a trade I'm happy to make every time. Now, let me talk about something else that makes starting early so important. And that's the ability to take risk and recover from mistakes when you're young. When you're 25 or 30, you can afford to take some risks. You have decades to recover if something goes wrong. You can invest more aggressively. You can learn from mistakes without permanent damage. But when you're 50 or 60 and just starting to invest, you can't afford mistakes. You can't take aggressive risks. You have to be conservative because you don't have time to recover. You've handcuffed yourself by starting late. I made mistakes when I was young. I pursued strategies that didn't always work out. I learned lessons the hard way, but I had time to recover. Those mistakes, as painful as they were, became valuable education, and I had decades ahead to apply what I learned. If you start early, you have that same luxury. You can afford to learn. You can take intelligent risks. You can build expertise through experience, all while compound interest is working in the background. But if you wait until you're older to start, every mistake is costly. Every lesson is expensive. You don't have the time to experiment and learn. You have to get it right immediately, which is nearly impossible. That's another hidden benefit of starting early. Not just the compound growth, but the ability to learn and take risks while you still have time on your side. Let me share another critical point. Something I don't think people appreciate enough. When you start investing early, it becomes a habit. It becomes part of who you are. And that habit is worth more than any single investment. When I started young, it became automatic. I didn't have to think about it. I didn't have to force myself. I just did it because that's what I did. Save, invest, repeat. It was habit. That habit sustained me through good markets and bad, through booms and busts, through times when investing seemed foolish and times when it seemed brilliant. The habit kept me going. But people who start late in their 30s or 40s or 50s, they don't have that habit. They're fighting against decades of not investing, against years of spending everything they make. Changing that pattern is hard, really hard. So starting early isn't just about the money. It's about building the habit of investing before you develop the habit of not investing. It's about making saving and investing automatic before lifestyle inflation makes it impossible. Here's another thing about starting early. Your income in your 20s might not be high, but your expenses shouldn't be either. You probably don't have a mortgage, maybe no kids yet, lower responsibilities, lower costs. That's the perfect time to develop high savings rates, to live on very little and invest the rest, to build that foundation before life gets more expensive. But most people do the opposite. They see their 20s as a time to enjoy themselves before real life starts. They spend freely. They accumulate debt. They develop expensive tastes and habits. And then when their 30s come and they want to start investing, they can't because their lifestyle costs too much. I lived incredibly cheaply in my early years. Minimal expenses. I invested every dollar I could. And that decade, that foundation set up everything that came after because I built the habit and I built the asset base while I was young. Most people waste their 20s financially, and they spend the rest of their lives trying to catch up, and they never do, because you can't catch up. You can't make up for lost time. You can only stop losing more time. Now, I know some of you are older. You're in your 30s, 40s, 50s, and you're thinking, it's too late for me. I should have started earlier, but I didn't. What's the point now? And I want to say this as clearly as I can. It's not too late. You've lost time. Yes, you've lost compound growth. Yes, but starting today is infinitely better than starting tomorrow or never. The best time to start investing was 20 years ago. The second best time is right now, today, this moment, not next month, not next year. Now, because every day you delay, you lose more. The opportunity cost keeps accumulating. The compound interest you're missing keeps compounding. The hole keeps getting deeper. So if you're older and haven't started, don't waste time feeling regret about the past. Feel urgency about the present. Start today. Invest what you can. Build the habit now. Give compound interest whatever time you have left. It won't be as powerful as if you'd started at 20, but it'll be far more powerful than if you wait until you're 60 to start or if you never start at all. Let me give you one more comparison. One more way to see the cost of delayed starts. This one really drives it home. Person who starts investing $100 a month at age 25. By age 65, they've invested $48,000 total, At 10% returns, they have about 32,000. Person B waits until age 40 to start. They invest $300 a month, 3 times what person A invested trying to catch up. By age 65, they've invested 90,000 total, almost double what person A invested. How much do they have? About 341,000. Not even 4% of what person A has, despite investing almost twice as much money. That's the brutal math of starting late. You can't catch up by investing more. You've lost too much time. Person B would need to invest about $700 a month, 7 times what person A invested, just to end up with the same amount. That's why I'm so emphatic about this. That's why you'll wish you started earlier. Because the regret is real, the loss is real, and the inability to catch up is real. Most people learn this too late. They reach their 50s or 60s and finally understand what they've lost. Finally see the compound growth they missed. Finally realize they can't catch up, and they're filled with regret. Don't be that person. Don't learn this lesson through painful experience. Learn it now. Learn it from the examples I've shown you, and then act on it. So let me tell you exactly what you should do right now. Today, as soon as you finish listening to this first, if you haven't started investing yet, start today, not tomorrow. Today, open a brokerage account. Vanguard, Fidelity, Schwab, doesn't matter. Pick one and open an account. Second, invest whatever you can. Even if it's just 50, even if it's just 25, the amount doesn't matter. What matters is starting, breaking the seal, beginning the journey of compound interest. Third, set up automatic investments. Have money automatically transferred from your checking account to your investment account every month. Fourth, invest in something simple. An S&P 500 index fund is perfect for most people. Low cost, diversified, no complexity. Just set it and forget it. Fifth, commit to never stopping. The money you invest today will keep compounding for decades. Don't interrupt that process. Don't pull it out for a car or vacation or whatever. Leave it alone. Let it grow. Sixth, increase your investments as your income increases. Started with 50 a month. Great. Next year, make it 75, then 100, then more. Keep increasing as you earn more. Seventh, ignore the market noise. Don't watch the daily fluctuations. Don't panic when it drops. Don't get greedy when it rises. Just keep investing consistently regardless of what's happening. Eighth, educate yourself. Read about investing. Learn about compound interest. Study successful investors. Make learning about money part of your life. And finally, teach others, especially young people, your kids, your siblings, your friends. Share what you've learned about the importance of starting early. Help them avoid the mistakes you might have made. These 9 steps will set you on the path to wealth. Not instant wealth, not easy wealth, but real sustainable life, changing wealth that comes from giving compound interest time to work. I've spent decades learning about markets and investing. And if I could distill everything I've learned into one lesson, one piece of advice that matters more than anything else, it would be this: start investing as early as possible today if you can, and never stop, because time is the secret ingredient. Time is what turns small investments into fortunes. Time is what makes ordinary people wealthy. Time is what you're losing every day you wait. And time is the one thing you can never get back. Money can be earned. Knowledge can be learned. Skills can be developed. But time, once it's gone forever. So don't waste any more time. Don't wait another day. Don't tell yourself you'll start next month or next year. Start now, today, this moment. Because I promise you, I absolutely promise you, if you don't start now, you will regret it. 10 years from now, 20 years from now, 30 years from now, you'll look back and wish you'd started earlier. But if you start today, you'll look back and thank yourself. You'll see the compound growth. You'll watch your wealth build. You'll experience financial freedom. And you'll think, thank God I started when I did. That's the choice in front of you right now. Regret or gratitude, poverty or wealth, starting today or wishing you had. Choose wisely. Choose to start. Choose to give yourself the gift of time and compound interest. I started young. I wish I'd started even earlier. Don't make the mistake of waiting. Every day counts. Every month matters. Every year is precious. Start today. Your future self will thank you. I promise. Good luck.